good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're touching on a couple of topics, but of course we're going to review the financial performance of Prestige Holdings Limited for its 9-month fiscal period ended August 2021, and it was a fairly challenging period, admittedly, for the group, which should be or could be looked at as a wider reflection of the general restaurateur operating industry in Trinidad and Tobago amidst significant closures. We'll touch a little bit on a central bank announcement as well as some other developments in the market, which may be of interest for investors this week. So let's get straight into it and looking at that, those results again of Prestige Holdings Limited. The company or the group rather delivered a diluted loss per share of 50 cents compared to earnings per share figure of 14 cents per share in that prior comparable period in 9 months of 2020. Total revenues were down just around 26% from 666 million to just around 490 odd million. Gross profits down from 216 million to 158. And that loss attributable to shareholders swinging from a very marginal profit in the 9-month period of 2020 of 0.9 million to a loss of just around $51 odd million in overall. So it's been quite a challenging period, and we can see that reflected in terms of Prestige Holdings Limited's revenue trends. And we can see that in that 9-month period over 2020, revenues would have declined just around 20% with 34 days of restaurant closures in that particular period. The number of days of closures actually increased in the 9-month period of 2021 for an overall of 80 days, again, for that period ended August 2021. And we can see that revenues actually accelerated in terms of a decline, falling 26.4% from 666 million to just under that $500 million mark. As mentioned, now with increased vaccinations having taken place, that vaccine to operate theme certainly coming into force in the recent weeks, and continued reopenings, certainly we would expect rationally that there would be some meaningful recovery in terms of revenue generation for the group over the next coming couple of quarters. So that's certainly something to look forward to for investors. In terms of operating margins, well, in terms of their gross operating margin or gross operating profit margin, Prestige has been relatively consistent and maintained fairly stable and healthy margins despite the very significant volatility to their operating environment. And we can see that gross operating profit margins in that green column would have hovered just between that 32 and 33% level over the past couple comparable financial periods, which is quite good given, again, that certainly uncertain operating environment that would have been confronting the group. Now, at the operating profit and profit before tax margin level, however, with significant fixed costs still being incurred by the group, the operating profit and profit before tax margins would have swung from positive to negative territory. Again, looking ahead, investors should expect some significant improvement in revenue generation and a return to positive profit margins at the profit before tax level and certainly operating profit level in subsequent periods. So at a price of $7.34, while Prestige is trading at a dividend yield of 0.8% compared to the sector average of 2.9%. No price earnings ratio given that it's generating a loss per share at this point in time, but it does trade at a market to book level of just around 1.7 times compared to the sector average of about 1.1 times. So with those elevated valuations in mind, but certainly looking with one eye ahead at a gradual reopening, but tainted with some level of or degree of economic uncertainty, Bourse maintains a neutral rating on PHL for the time being. Now, away from Prestige and financial earnings and looking more at a macro level trend in the economy, the central bank would, in its most recently published monetary policy announcement, would have kept its benchmark repo rate consistent at just around 3.5%. But it did note, however, a fairly significant increase or discernible increase rather in terms of food inflation, and as we can see in terms of that that green trend line there, we can see that food inflation has been particularly a lot more volatile over the past couple of months. As of December 2020, year-on-year inflation was 4.5%. After declining to some degree into March, it has since ticked upward to that 4.9% level, and the central bank would have noted with some concern that the adjustments to transportation fares could have a broader inflationary impact as well over time on the Trinidad and Tobago economy and prices in general. And we can also see or anticipate that the liberalization of fuel markets, as well as some adjustment to tariffs on electricity and water, could have an additional broader inflationary impact on Trinidad and Tobago prices, not just in food, but also in core goods and services as well. So something that we'll be keeping our eyes on, and certainly investors will be keeping their eyes on going forward, is that trend in inflation. And finally, well, First Citizens Bank Limited officially becomes First Citizens Group Financial Holdings. As of today, it was delisted. First was delisted rather on October 13, 2021 to facilitate this transition. And FCGFH, which is the new ticker symbol, begins trading today, actually October 18, 2021. This was approved by shareholders, and the administrative details and regulatory approvals were, of course, received and completed over the past couple of days. And it was, of course, a one-for-one share exchange. So if you owned 1,000 shares of First, you will now be the owner of 1,000 shares of First Citizens Group Financial Holdings, or FCGFH. So investors and shareholders of First, just remember that the ticker symbol does change on your statement from FIRST to FCGFH. But that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. And you can catch this article in today's business section of the Bigger, Better Trinidad Guardian newspaper. That's it for this week's edition. Stay safe, get vaccinated, and see you next time on the Bourse Report.